Hey, what's up, guys? Welcome back to the channel. We're going to break down volume and why it's so important when day trading, and why having low volume is such a high risk for us day traders, and why we want to be careful of that. So volume is going to be probably the number one key factor to my successful trades. Having high volume, typically paired with my chart setup that I like to see, is going to provide a little bit more conviction to my trade and allow me to be a little bit more aggressive. Now, the way I watch for volume is we have a indicator built for this specifically. In our invite only tab, you can see the dynamic volume histogram. I'll just add that to the chart. And we've made this really simple. The way we're looking at this is a color-coded histogram down below your chart that's going to notify you just by simply referring to the color if there's volume or not. So when I'm looking to trade, typically I'm looking for high volume. So that means I'm looking for these green histogram bars down below, and that's going to be this histogram that I'm looking at here. So these green bars. Now these green bars, that's signaling that yes, we have high volume. So these two candles here, we can see that we did have high volume. And we started to taper off a little bit in volume, and then all of a sudden we see this red. When we see that red, that means we have very low volume. And so for me, if I'm looking to day trade, I'm looking for high volume or at least moderate volume. So seeing those red histogram bars for me is a major no. So I will not trade if I see that type of volume. And if I'm ever taking a trade like that, it's really just a lotto or a small position, something I'm willing to possibly lose on, because again, having the lack of volume is going to come with this choppy price action. So you can see this chart here got pretty choppy, and that's because again we had low volume. Once we get a little bit more volume, we see smoother price action, these wider or larger candles instead of these kind of speck looking candles here. So whenever you pull up a chart, if you're seeing candles similar to this here, then you can probably assume that there is low volume. And again, the histogram down below is going to notify us of that. So yellow histogram bars, that's moderate volume. That's okay. I don't mind seeing that. However, during regular market hours, I like to see a little bit more volume. And green for high volume. So typically when I'm trading, I'm really looking for those green histogram bars. Red, really no volume, no trade. That's one of my personal rules. And if trading with low volume, of course, we expect choppy price action. That's what we're seeing here. Now, one of the concerns of or with trading low volume or trading with stocks that have low volume is that you're going to see a wide spread on the bid and ask price. So sometimes this candle here may look like it's sitting around this price of let's draw a line here of 275 at the low. But you may be getting filled at the top of these candles. So you might get filled at 285, 289. But then when you go to sell, if you're really not feeling this trade any longer, you go to sell and you're actually dealing with slippage. So something like this candle over here, this green candle, if you were to get in, you may be getting in around $3, $3.03 getting filled. But then when you're going to sell at 301, 302, no one's buying there. So instead, there's a wide spread on the bid and ask price. And sometimes when that bid price falls all the way down here, and that's what they're willing to pay, sometimes you just need to get out of your setup. And so sometimes you're dealing with that major slippage. You're going to deal with more slippage on stocks that have low volume, and that's because there's not enough liquidity to really provide those quick trades and those larger orders. So if trading lower volume, of course, we want to mitigate risk. Trading low float stocks, we're looking to mitigate the risk by trading a smaller size and tightening up our stop loss, or choosing to avoid the situation altogether and wait for a higher quality setup elsewhere. So again, low volume, guys, major concern. It is a major factor when day trading. We want to make sure that we are trading with high volume. The dynamic volume histogram makes it really simple. All we have to do is refer down to the bottom of this chart and say, if I'm looking to get in on this candle, if I'm looking to possibly add here, then of course I'm looking to pair that with volume. And if I look down below, we can see these red histogram bars. So even though I have a setup that I like on the chart, maybe I'll just sit this one out as it is higher risk. And so sometimes you'll see that missing out on a trade, but more times than not, what you'll see is you're missing out on a nasty pullback and saving yourself from those massive losses. And it's not just about obtaining the profit, it's also about retaining that profit. So let's make sure that, again, risk mitigation is key. So guys, thank you for tuning in. If you learned anything from this quick tutorial, feel free to smash that like button, and I'll see you in the next video. Thanks, guys.